All right, we are live. My name is Amar, and I'm a financial advisor for Client First Capital. And this is my good friend,
Kyle, and I'm with Clover Hill CPA, and I work in tandem with Amar, but we are two separate entities. And Amar does what he's good at, and I try and do what I'm good at, which is tax
yeah,
stuff.
and
So,
and we have a good what would you call this disclosure screen to show everybody that gives us our disclosures. Let's start with that. What do you think, Kyle?
sounds great.
All right. So basically, it says we haven't taken your account or your situation into account. We're not giving you advice or guidance. We're simply giving you education. And a lot of the education pieces here it's not a client arrangement, right? Not a client agreement. So take it for what it's worth. See if it impacts you, and if you do want to have a formal working relationship, please reach out to us. Kyle, you have anything to add?
No, I think that sounds good. This is purely just a conversation, and the topic we chose today was SALT taxes, which is the state and local tax deduction. And yeah, I'm reading articles from about 4 hours ago on how this could affect you, and obviously could change very quickly. So
Let's just pause right there. It's crazy how quickly these things are changing, right, Kyle? I think for a lot of people out there, like if they're looking to take advantage of SALT deductions and stuff like that, I mean, they're going to be doing planning into December for year-end numbers. Would you agree?
yeah, Congress always gives us more work to do. So the way things change so quickly, it's one it's very difficult to keep up with, and my goal is just to try and figure out what is and what isn't a waste of time to talk about. And I don't think.
Yeah. So let's start with what is SALT? Like, what is the acronym SALT? What is it meant to do? When did it start? How did we get here?
Yeah, so it's the state and local tax deduction. So that's the acronym SALT, which is, yeah, captures headlines better. And it's, I think everyone's going, what's SALT? So
It's not going to give you hypertension. Well, actually, maybe it
yeah,
will.
yeah, actually, yeah, and this will give you hypertension without the sodium. But um, yeah, so it was a long-standing provision in the tax code that you could deduct your state and local taxes against your federal taxes. So as state and local jurisdictions, tax rates have been going up. The tax base has been going up significantly, and the tax rates have gone up significantly in the last probably 15, 20, 30 years. That number kept getting bigger and bigger. And so in a state like California or New York or Oregon or Illinois or somebody with a state with a high income tax, the state and local tax deduction that you could receive on your tax return was pretty substantial. And before it was without limits. So Jeff Bezos or Elon Musk would get the same tax benefit that you and I would get essentially without limitations. The big caveat there is that changed in 2018. So starting on January 1, 2018, the state and local tax deduction was capped at $10,000 for all taxpayers. So that includes your real estate taxes, state and local income tax, and other personal property taxes that you could pay. And so most of my clients that itemize their deductions, max out at 10,000, with just their real estate taxes, right? So, a lot of my clients have no benefit for paying, the state and local income taxes, and that's been on the books, for 3 tax years now. And now the Buildback Better plan, the new Democrat proposal,
BBB, right?
yeah. That they're talking about lifting that $10,000 cap to either 72,500 is a number that's floating around. I've seen a couple at 80,000, but I think the House Democrats' plan right now is 72,500 would be the new cap instead of $10,000.
And And I think there's like two plans, right? Even the Senate has a plan that would be unlimited up to a certain income threshold, and then it would be capped at 10,000 for people above those income thresholds, and then it would phase out to zero as part of that as well, right?
Yep. And so I think one proposal was 400,000, another was 500,000. So it effectively accomplishes the same thing, where high income earners don't get an unlimited SALT deduction, but a lot of middle to middle high income earners would get a benefit for the state and local taxes paid. Which, yeah, I don't want to get into the politics of it, but I think that's a lot more reasonable than the current $10,000 cap. Just because.
And both of these bills, or sorry, go ahead, Kyle.
I was just going to say the discrepancy between what a lot of people in my state pay in Washington versus California, your effective tax rates, 10, 12, 13% higher. Whereas before it was probably closer to 6 or 7. So you're just paying a lot more in overall tax, in a high income tax state like California. So.
Yeah. And I was just going to say is that, they're all depend. So there are a lot of variables here. How much income you have, what type of assets you have, where you live, right? Because all those play a role in how the SALT tax affects you. But the other thing that both of the bills I think have is that they raised the expiration date to 2032 instead of in 4 years, right? So I think that is a big thing too. So this will be enough to push us out for some time, right? So we won't be trying to refigure this out every year, which seems to be every year.
Yeah, so the Tax Cut and Jobs Act that was passed at the end of 2017, that was set to expire in 2025. So the SALT deduction or the SALT cap at $10,000 was going to go away at the end of 2025. And so this new proposal, yeah, like you said, would push it out to 2031. So an extra 5 years. And so it's always kick the can down the road, keep us in suspense, keep us guessing.
And remember in 2017, the SALT was introduced to really cut the taxes on corporations as well as the largest income earners, meaning the 39.6% tax bracket dropped down to 37%, right? And corporates went from 35 to 21%. So it's kind of even out that budget. So let's kind of change gears and talk about what's happening now. How does that affect me? So you want to take that one, Kyle, specifically for people that itemize?
Sure. So yeah, I think the biggest consideration between now and the end of the year, and also one more piece on this is that the current proposal would be retroactive back to January 1, 2021. And so you could have a little window of opportunity here between now and the end of the year to potentially take advantage of this. And how it affects you is just monitoring kind of where your income levels are. If you're kind of in that $400,000 to $500,000 range, or maybe $600,000 to $700,000 range, depending on what proposal goes through. You're getting you're paying a much lower tax rate up to those brackets because you get a full deduction for any state and local taxes paid. So let's say you pay 12% in California on your next dollar of income. Well, you get 12% as a tax deduction, which reduces your federal tax by 37% per se. So your tax brackets aren't going to change much, but your effective tax rate will change pretty significantly if you can deduct the state and local taxes. So you'll end up with a lot more money out of pocket, and just something to monitor. So if let's say you're selling some stock or doing a Roth conversion, that could be a level to kind of monitor to not maybe breach, and preserve your next income event, your next Roth conversion, your next stock sale until next year.
Yeah. I think that's big is that, for some people it will create more room for more Roth conversion in the existing year. But also some people you may bump up into another level, which could affect you as well. I think that's a good summary there. And I think, will this SALT stuff pass, or will it become law? I mean, we don't know, right? But if it does, depending on what your income is, where you live, what assets you actually own, this could impact you into year-end planning. So if you have questions or concerns and you want advice from professionals, reach out to Kyle or myself, and we'll be happy to help you. Thank you.
Sounds good. Thanks, Amar. Talk soon.
Yep. Bye.
Bye-bye.